Friends, Igor Pechkovsky is here with Windermere Bellevue Comets. Welcome to another market update. We missed out on August because I was on vacation, and to be honest, I missed you a little bit. Not much, to be very honest, but a little bit. But today, I'm super pumped just to give you an update of where we stand on the market. I'll tell you the exact numbers in this video, and in the end, tell you a few thoughts of what you could expect from the fall, and probably what are we going to see in early January and February. But first things first, let's go into the Eastside and let's rock and roll. If I guys summarize you this market update, the market is very much in a very stable place. We've gone through a lot of uncertainty over the last 12 months. The market was crazy at 21 and beginning of 2022. Then the interest rates were going up and no one knew when it would stop. And in December, we hit the bottom of 2022. And up until this point, we pretty much went up and got stable. And there were two reasons for it. Reason number one, we still have a very low inventory. Reason number two, we still have some money to spend. So inventory on the east side, 1.4 months, as you can see at this graph. Last year, same time, we were closer to 1.6 and even 2 months of inventory around the same time. So what happened is interest rates are high, and you have to think of the homeowners. They might consider selling their property, but they refinanced their real estate at 3% over the last 2 years. So interest rates are also on their mind, because if they would have to go somewhere, they would have to buy, and at 7% interest rates, they might not afford it, so they're not looking to sell just yet. So inventory is low, and on another side, you have pretty decent demand for real estate. How is the demand? Well, let's look at the over asking graph here on the east side. We have in August 35% of homes sold over asking. 35% is the huge number. Compared to the last year when market was dropping 13%, comparing to July is still within the same ballpark, but good houses sell, and they sell right quick. The buyers are there, make no mistake, even at 7.25% interest rate. The rest, the inventory that we have, 1.4 months, those are usually the homes that could be a little overpriced or maybe less interesting or not as dialed as the others, because the good houses sell and right quick, and 35% over asking is the proof of that. And that brings us to the median price right at 1.45 million. Versus the last months we were at 1.5 mil, so it got stable. August is usually a slower month because people travel and go on vacation, but comparing to December, where we were at the bottom at 1.3, we're up 12%, and comparing to the previous highs of the market of April of 2022, which was at 1.7 million, we are down 16%. But again, as I said, market just got back to being stable, and this median line, if you look at it, we are just moving in that perfect trajectory, and that's where that market is. All right, now that I mumbled through the basics, let's talk about Seattle. Let's speed up. So Seattle, 1.4 months of inventory, same deal pretty much. 1.4 months is better than what it was in 2021, as you've seen at 0.7 of a month, right? The inventory was absolutely miserable, but it's still at the same time very much a seller's market, right? We're not at 2 months of inventory, we're not at months, it's 1.4, it's relatively low, and the good houses sell. So the median is right under that 900,000. So we're a little bit below where we were a year ago. At a peak of a market, Seattle was at $1 million median, now is at 900,000. I mean, that's what interest rates did, right? 7.25, but we still have 34% of homes sell over asking, which is always bring my point. Good houses sell, market is stable, it's moving at its own speed because we simply do not have that much inventory, and I don't believe there will be any reason to have any much more. All right, my dear friends, we're almost done. Let's talk about Snohomish County. So in Snohomish County, the inventory is right around 1.1 months. Doesn't have significant, like ups and downs. It's relatively around 1 month. Could go a little bit up, but of course it's more inventory than in 21, but it's relatively very low amount of inventory. That prompts the market 40% sold in August over asking. Yet, the matter of fact, these are not huge bidding wars, right? They are relatively easy to compete. There are maybe 2-3 offers. The escalation median price on average is 3%. So if there is a $600,000 home, we're talking about $18,000, $20,000. But the moral of the story, even at 7% interest rate, 7.25 on that price point, we still haven't price escalations. Market is slowly but still moving up at that market. And you have the median price at $730,000. Like, it's pretty stable. It's a little lower than what it was last year because, of course, rates were increasing and we're still just got back on being stable again. But that's what that market is. That's what that market should be. So let's wrap up. Well, thanks for being with me today on this journey. I could tell you that the second half of this year, not even a half, the last couple of months, we will see a little bit slower real estate market. There will be a fewer listings, there are a little fewer buyers, because it is, let's face it, expensive to buy. The rates are higher. But rates are directly correlated with price. And my advice to you, if you could buy this fall, I would. Because if what we think will happen is true, which eventually rates would have to turn and make a pivot point, right? We have 2024 elections coming up. Economists are talking about rates starting to drop in the next couple of months. We shall see if that happens. But eventually it will happen. Either it could be January, either it could be February. Our economy is doing good. You could make arguments going both ways. Why the rates not gonna drop, why the rates will gonna drop. I can't tell you exactly when it will happen. A lot of sources say it will be beginning of the year. I think it will have to do a lot with elections of next year. But when that happens, make no doubt, real estate prices will start climbing up. So you have the choice of locking a reasonable price on the market today and refinances later, and I 100% believe in that, or when there will be multiple offers and the median over asking will be not at 3 but at 10%, you could be shopping then. And believe me, I've been there. Whoever bought with my clients over the last year and a half, we've been there. It's no fun market to be in. So if you can win in today's relatively low competition, but still competition today, when rates drop, it will be a totally different market, guys. So reach out to us, give us a call. Let's do this. Let's look into market. Let's look into your picture. We'll be happy to help guide you through this process. I hope you enjoyed this video. Please make a comment if you agree, disagree on our assessments. Share with your friends and like it, and we'll see you soon.